Your favorite retail stores might be in serious trouble. According to UBS, over 50,000 stores in the U.S. are at a risk of closure, and this could potentially reshape America's economic landscape as we know it. Brace yourself, because by the end of 2023, the nation's retail footprint might shrink by a whopping 20%, the largest annual decline since the retail apocalypse began in 2017. From beloved brands like Starbucks and Disney to apparel retailers and department stores, the entire industry is hanging by a thread, grappling with decreasing sales, rising inflation, and mounting debt. In this video, we've compiled a list of 12 major chains on the brink of extinction. Is your favorite brand on the bankruptcy watch list? Stay tuned to find out. Number 12. Disney Retail Stores. The magic is fading for Disney retail stores as they grapple with the lowest sales in a decade. The decline has been so severe that an additional 53 locations are set to be shuttered this year, following the closure of 60 stores in 2022. In an effort to adapt to evolving consumer preferences, the entertainment giant is making strategic adjustments to its operations. As part of this transformation, Disney is reducing its workforce by 15%, resulting in a staggering loss of 7,000 jobs. While the company focuses on strengthening its online presence and enhancing digital experiences, this transition marks a significant shift for Disney fans, who are accustomed to the allure of visiting their beloved retail havens. Number 11. Dollar General. America's beloved neighborhood general store, Dollar General, is rapidly vanishing from cities across the U.S. Disturbing reports confirm the closure of several locations in California, Colorado, Indiana, and Ohio, casting a dark cloud over the entire chain and potentially leading it towards bankruptcy. In a shocking revelation, the U.S. Department of Labor's Occupational Safety and Health Administration has uncovered a distressing pattern of Dollar General exposing its workers to unsafe and hazardous conditions. Despite over 180 nationwide inspections and fines exceeding a staggering $15 million, Dollar General has neglected to address the serious health and safety violations since 2017. Kurt Peter Meyer, OSHA's regional administrator, has raised alarm bells about the dangers posed by these perilous conditions, particularly in times of emergencies, and Dollar General's refusal to protect its employees has landed the struggling company in the midst of yet another daunting lawsuit, one that could potentially push it over the brink of collapse. Number 10. Party City. It's time to say goodbye to the once vibrant and festive atmosphere at Party City. The curtains are closing on this beloved retailer of party goods and decorations as it bids a somber farewell to its loyal customers in 2023. The company's financial struggles have reached a breaking point, driven by soaring inflation and a shift in consumer spending patterns due to the pandemic's impact on in-person celebrations. In a devastating blow, Party City made the difficult decision in November to downsize its corporate workforce by a staggering 19%, a reflection of the $200 million losses incurred in 2022. The situation grew even grimmer on January 18th as trading came to a halt and Party City stock was immediately delisted. The company's bankruptcy filing revealed a staggering $1 billion in assets, weighed down by an overwhelming $10 billion in liabilities. And now the process of permanent closure looms over all Party City stores. Number 9. David's Bridal. The enchanting empire of weddings, David's Bridal, often hailed as the Walmart of weddings, has recently taken a heartbreaking tumble. The beloved bridal retail chain has made the tough decision to file for bankruptcy. And in a devastating blow, the company has announced plans to lay off a staggering 82% of its staff, affecting approximately 9,200 workers. David's Bridal has been battling with financial woes for months, and this is its second bankruptcy declaration in 5 years. The company's CEO, James Markham, has revealed a distressing truth. Unless a buyer emerges swiftly, all stores may be forced to shut their doors forever by the end of the year. This news has sparked a wave of anxiety among brides-to-be across the nation. The uncertain future of this beloved wedding haven has cast a shadow over the dreams of many individuals eagerly awaiting their special day. Number 8. Bed Bath & Beyond. Attention, bargain hunters! Grab your stash of treasured 20% off Bed Bath & Beyond coupons because time is running out to cash them in. After struggling for years, the retailer has finally succumbed to the harsh reality of Chapter 11 bankruptcy. And to salvage what they can, Bed Bath & Beyond is implementing drastic cost-cutting measures that will send shockwaves through their operations. The company is embarking on a complete liquidation, forcing the closure of all 360 Bed Bath & Beyond locations and 120 buybuy BABY stores by June 30th. It's a tragic tale of mismanagement, with a series of bad decisions ultimately contributing to the chain's demise. Now, a massive going-out-of-business sale is underway, and shareholders should consider selling their shares while they still can, as debt holders take priority in bankruptcy proceedings. Number 7. Big Lots. This retail giant, offering an extensive range of products across various categories, including furniture, groceries, and toys, has encountered significant hurdles. Despite its reputation for low prices and diverse selection, Big Lots has been struck by a troubling downturn in sales. With an impressive footprint of 1,425 stores spread across 48 states, Big Lots is confronted with a daunting challenge: hundreds of unprofitable locations that may be on the brink of closure. In a recent announcement, Jonathan Ramsden, the company's CFO, unveiled plans to shutter all urban centers before the close of 2023. Financially, Big Lots endured a significant cash burn through 2022, resulting in a staggering net loss of $210.7 million for the fiscal year. And unfortunately, this suggests more turbulence lies ahead for Big Lots. As devoted customers, we might have to bid farewell to our beloved stores as the chain navigates through these challenging times. Number 6. Gymboree. Once a beloved children's clothing store, Gymboree has faced its fair share of challenges since 2021. In a dramatic turn of events, Gymboree filed for bankruptcy back in 2019, leading to its acquisition by The Children's Place. However, the shifting tides of the retail landscape demanded bold action, and The Children's Place made the tough call to shutter all physical stores and pivot towards e-commerce. Today, Gymboree can only be found online, but the road ahead is far from smooth for this iconic brand. Fierce competition from other children's clothing retailers continues to pose a significant threat, casting a shadow of uncertainty over the brand's future. As loyal fans of Gymboree, let's keep our fingers crossed and hope for a turnaround that will bring back the joy and vibrancy this brand has always represented. Number 5. Tom's Shoes. If you're a fan of the renowned socially conscious footwear brand Tom's Shoes, brace yourself for some unsettling news. This brand that once captivated hearts with its charitable mission is now caught in a whirlwind of declining sales and surging prices. In an effort to navigate the treacherous waters of mounting debt, Tom's Shoes had to implement significant changes. Instead of donating shoes, the company shifted its strategy to donating a share of its profits to charity. However, even with these adjustments, Tom's Shoes experienced a debt rating downgrade last summer, casting a shadow of uncertainty over its future. Retail analysts are now speculating that this summer could potentially mark the end of the road for Tom's Shoes. Let's hope this beloved brand finds a way to overcome these obstacles and continue making a positive impact in the world. Number 4. Starbucks. Even the world's largest coffee house hasn't been able to escape the relentless turbulence rocking the retail industry. With critical shortages of key ingredients, packaging, and personnel, Starbucks found itself facing a daunting challenge. In order to weather the storm that's currently brewing in the sector, the company had to make some tough choices to cut costs. And as a result, Starbucks is now in the process of closing 500 locations, a significant move to ensure the company's long-term viability. So if you're a regular at your neighborhood Starbucks, brace yourself for potential changes ahead, as your favorite local spot may find itself next on the list. Number 3. Christopher & Banks. Known for its authentic style and timeless charm, this iconic brand has recently faced a harsh financial storm, resulting in its inaugural bankruptcy filing in 2021. The combined weight of the pandemic and ongoing disruptions proved insurmountable, forcing Christopher & Banks to seek protection from the tempest. In response, Christopher & Banks embarked on a bittersweet journey, conducting going-out-of-business sales across its hundreds of locations nationwide. With over 400 stores bidding their loyal customers farewell, it marks the end of an era for this beloved women's fashion brand. Number 2. 99 cents only stores. Despite undergoing multiple out-of-court debt restructurings, this beloved bargain haven finds itself trapped in an unrelenting cycle of financial woes. Inflation is on the rise and operational costs are spiraling out of control, adding fuel to the fire of their internal issues. With a vast network of over 350 locations spanning 4 states, it's becoming clear that consumer demand for this discount retailer is on the decline as customers raise concerns about skyrocketing prices. Experts note that 99 cent only only stores face a competitive disadvantage compared to larger retailers with extensive supplier networks and market leverage, which allows them to maintain low prices. The chain's negative cash flow has persisted for 3 consecutive quarters, and its credit ratings paint a bleak picture of ongoing troubles. It seems that the road ahead is fraught with challenges for 99-cent-only stores as it valiantly strives to overcome these daunting obstacles. Number 1. Amazon. As for this retail titan, the news isn't positive. Amazon is making major moves that are causing ripples in the industry. All 68 of their physical bookstores, pop-ups, and toy home goods shops in the US and UK are closing their doors. These closures mark the end of their pioneering brick-and-mortar retail experiments. Amazon has always been innovative, from cashierless convenience stores to 4-star locations featuring top-rated customer favorites. But their physical stores only accounted for a mere 3% of their $137 billion in sales last quarter. However, the bad news doesn't stop there. The e-commerce behemoth is currently in the midst of its most massive wave of job cuts to date, and it shows no signs of slowing down. The numbers are staggering. In January, a brutal 18,000 jobs were eliminated, and now an additional 9,000 employees are in the process of being laid off since the beginning of this month. In total, the company has let go of around 100,000 employees. Is this the final chapter for Amazon? Don't miss out on our video linked in the comments. Brick-and-mortar retailers are caught in a whirlwind of challenges, from the relentless dominance of e-commerce to the daunting task of luring customers back through their doors. The retail landscape is undergoing a seismic shift, and the question on everybody's mind is this: can these fading brands rise from the ashes, boost their revenues, and truly shine amidst the chaos? Let us know in the comments.